All right, what's up, guys? Welcome to the technical trading workshop. As always, I'm unmuted. Welcome, everyone. Thank you for letting me know that I was muted. I can't believe every single time I forget to press that unmute. It's like every single time I even tell myself before going live, like, let's try to remember to unmute myself. Anyway, thank you for joining here today, and thank you for joining yesterday's live stream as well. Really happy for all the positive feedback that I'm getting. I think it should be good now, though. Like, let me know in the comments if the audio is good. Hopefully it's all clear. So let me know if you can hear my voice. So I'm gonna continue as soon as I get confirmation that it is working. Testing. Is it working? It should be working now. Okay, all good. Got Stewart, it's a Penguin, Naxres. Nice. Got a lot of people in here. All right, welcome, guys. Welcome. So yesterday we talked about the basics of fundamental analysis. If you have access to the link, you should have that in your email. You can watch the replay. So in that one, we talked about the fundamentals. I explained some of the things that I look at in trading when it comes to technical analysis. And as you know, it's or as you saw yesterday, it's quite simple. We basically talk about market structure and we talk about reversal patterns. And those reversal patterns, it's same with the candlesticks. The candlestick, the candlestick formation, if you will, the pin bar and the engulfing. They are also reversal candles. And then we talked about the candlestick formations or the chart pattern formations. The double tops, double bottoms, the head and shoulders, the inverse head and shoulders, which is just examples of how a reversal pattern can look. And then, of course, we talked about horizontal levels, we talked about trend lines, and market structure. So today, I'm going to explain the RLZ method. Okay, so the RLZ method is where we combine the basics of technical analysis and especially the market structure analysis with the idea of looking at the break and retest concept. Okay, so the break and retest concept of horizontal levels, it can also be traded using trend lines. It's completely up to you. But what I've tested is, and I've tested many hundreds and hundreds of trades. I should probably say thousands of trades because I've been doing extensive back testing on this system. And it has a profitability to it. In trending markets, it works very, very well. Like I said in yesterday's live stream, in yesterday's webinar, the basics of technical analysis and the foundational principles of technical analysis still holds true to this date as they did when Charles Dow, which is considered the father, the father of modern technical analysis, when he talked about the Dow theory, the principles still align today. So what is the break and retest? Again, not going to go into like super detailed specifics here, but the break and retest is simply you have now the break and retest can happen in the ranging market, it can happen in all markets, but we are interested in the break and retest in a trending market. Okay, so what is a break and retest? Break and retest is when a resistance level breaks it upside, and again, I'm going to be showing you mostly any questions that you have, you can go ahead and just ask them in the comments right away. If you do have any questions, just ask them right away. If it's a question that aligns with the thing that I'm currently talking about, then I would gladly explain that while talking about the concept, because I'm sure that if you have a question, then I'm sure that many others watching this has the same questions. So it's just good for the overall experience to ask all the questions that you have, and I will try to cover them when talking about the specific subject that the question is coming from. Okay, so we got a break and we got the retest. Very simple. That's a break and retest. That's all you need to know. Break and retest. Resistance breaks the upside. That resistance level gets tested once again. And also, one very important thing here is the first retest is important. And let me quickly cover this. Now imagine that you have a resistance level with 100% sellers. Okay, so you have the first test and you absorb 25% of those sellers. You now have 75% sellers left, 50% sellers left, 25% of those sellers left, 0% of the sellers left, and you get the breakout. This is not exactly how the markets work, but it's a good way of understanding why the first retest is the best test. We got on every test, we absorbed 25% of the sellers, which means on the fourth retest, all of those sellers are absorbed and we're now breaking through the level. Now, what happens on the first test? This is why a level that gets tested repeatedly as resistance becomes weaker as resistance, but once the level is broken, it becomes stronger as support. That's because we are going to imagine that all of these sellers are now turning into buyers, and now the level turns into 100% buyers. And now, of course, on the first retest, we have 75% or 100% strength from the buyers, and that will push price higher. That is why the first retest is the best test. Another thing to remember is there's a difference between an immediate retest and a rounded retest. Here's a resistance level, price breaks through the level, and then you have the retest right here. This is a good question when it comes to when it comes from Mr. Pengu. Mr. Pengu says, how can we spot a fake out? This is how you spot a fake out. You want a rounded retest. You want enough time and space between the breakout and the retest. Sorry about that, I gotta adjust my mic. You want enough time and space between the breakout and the retest. You want to give the market enough time to accept this level as broken. Because what happens is you might have a resistance level, price breaks out, and you have an immediate retest just like that. And that means that there's not enough time and space between the breakout and the retest for the prices are not trading above that resistance for long enough for the market to accept that price as new support. So we can see if we can perhaps find some examples of that. Let's assume that this is a breakout. Okay, that's a breakout right there. This is the resistance level right here. Go back down to the maybe 1 hour. Great example. So we have a resistance level right here. I'm gonna go down even to the lower time frames because I do think that we do have a fake out here. Okay, this is actually a good one. Now, here's a breakout, right? We all look at this and we can agree that this is a breakout, right? Prices are trading above the resistance level. It's closing above the resistance level. And now what we want is a rounded retest. We want price to show us this type of motion. We want time and space between the breakout and retest for the level to be accepted as support. If we have an immediate retest, which means in the next candle or the candle after that one, we get an immediate retest of the level, well, that's a fake out. Now, how you determine a fake out is basically one candle. If there's just a wick going through the level, the candle opens here, wick closes here, that's obviously a fake out. We all know that that's a fake out. If the candle closes above and then closes, so the one candle closes above confirms the breakout, but then the next candle closes below, that's of course another fake out. This, in my opinion, is also a possible fake out where you have that immediate retest right there because the market is not giving enough time to accept that level as broken. And look at that. A lot of people will look at this and they will say, oh, look at that breakout and look at the retest of that one. We have a wick, but then the next candle comes along and it closes below the level. This is why you want enough time and space between the break and the retest. Let's go to the 1 hour. Look at the 1 hour. Now this is a very clear fake out. So what you need is you want a clean breakout, and a clean breakout is usually when you have, or what I mean with a clean breakout is the candle opens below the level and closes well above the level. A clean breakout, a strong clean breakout when it goes through the level and closes well above the level. Let's see if we get that. I think this is a not the best example, if I'm going to be honest, because I think if we remove that wick, then that would be a good example. But what we see here is now we have a solid breakout on the 1 hour and it continues higher. We can safely say by this time that, okay, now we have a breakout and we got enough time and space between the break and the retest. And what we want to see now is we want to see a retest of this level. Still, we got the breakout level here. Price is moving lower. Let's apply some market structure analysis to this just to keep our memories fresh of what we talked about yesterday. Here we got a bounce, a break, maybe a rejection here, and perhaps down here. The price is moving lower into that breakout level. Now we have the retest of that level. Now, obviously, we broke out on the 13th of November, and now we're testing it on the 18th of November. That's enough time and space between the break and the level. Looking at the 4 hour right here, this is absolutely beautiful. On the 4 hour, we got a thrust candle beginning below the level, closing well above the level, a clean breakout right here, and we're testing that level right now. Now, the RLZ method is all about combining different techniques and give different techniques and indicators to show you which retest you should be buying. Where does all the entry triggers and confluences with different indicators align to tell you that this is the retest that you're going to be buying? And then you see right here a nice little confirmation of a bounce, and now you move lower. So this would obviously not be a very good trade. You would probably be stopped out on that one, and then of course you continue higher. But this is a really good example of what a rounded retest should look like and how to make sure that you're not getting in on a fake out. Another question, do you enter immediately when the breakout happens or an extra candle just to be sure it's not a fake out? This is not a breakout trading system, so I'm not entering on the breakout. If this move happens, I will enter here. I will not enter on the breakout. I will enter here. This is not a breakout trading system. This is a break and retest trading system. When the breakout happens, I will then wait for the retest. That might happen the same day, the next day, or even the next week, or even the next month. Okay, so it's a waiting game. So that's the break and retest concept, which is central to the idea of the RLZ method. Now, again, you can trade this system with just the foundations. With just the foundations of going long and breaking retest of a trend, you don't need any of the indicators or anything like that. And what's interesting with this webinar today is I have not prepared any live examples for you guys. We will instead look to see if we can find real live examples in the market. I think that makes it much more real than just, me finding the perfect setups, showing you screenshots of like, look at this is how it, like, we want to look at the actual market, the live market. We want to see real examples on different pairs and maybe different markets and different assets to make sure that you see that this is real. This is not something that I've prepared before to make sure that it looks good. I want to make sure that it's actually actual proof that this is something that works historically in the market. Okay, now that's the break and retest. Now let's go through all the indicators that we are going to use for this system. So first, I explained yesterday how we are going to apply the stochastics RSI. So I'm going to remove these other indicators that we're not going to be using. At the bottom here is the stochastics RSI. And we're also going to be adding the 20 and the 50 EMA. Go in, we add the exponential moving average to our trading view chart. We go into that one, add the 20, and then we're going to use this one for the 50. So I'm going to have the 20 as the blue one, and then we're going to be using the 50 as the gray one. Okay, there you have it. Blue 20, gray 50. Those are the indicators that we are going to be using. Now, One thing that you might want to be doing as well is adding the daily moving averages to get a good idea of what the overall high time frame trend is doing. And to do that, you go into indicators and we search for higher, and then you have this one right here. It says higher time frame EMA. You click twice on that one and that brings up the daily moving averages. Now, the moving averages that I added first, they will be shown on the time frame that we're looking at. These daily moving averages will be shown on all time frames, and it's always going to be the daily moving average. So we go into the EMA plus setting right here. Go into setting, input 1 day 20. It's not going to be colored EMA. Style, I want the color to be blue. So all of these colors are going to be blue. And we're going to be selecting line with breaks. Now this should be, so I'll show you what it means with using line with breaks. Let's see if we can smooth this one out, if that looks better. Yeah, we're going to click the smooth one. And now you see it become dots. And the fact that it's we're using this style with line with breaks, it shows us the dots. This is how we differentiate between the daily moving averages and the 4-hour moving averages. We go into settings of this one. You know what we can do? We can just copy this one. Then you change the colors instead. Go in and we're going to select 50. And we're just going to change the colors. That's the same thing. And here we have it. The daily moving averages, this is on the 4-hour, and then we now see the daily moving averages on the 4-hour. If we go out to the daily, we now see the daily moving averages and the 4-hour moving averages. No, actually, of course, we see only the 4-hour and we see only the daily moving averages, is what I'm trying to say. So we go to the 4-hour, this is now the 4-hour moving averages, and the daily moving averages shows up at dots. Go into the 1-hour and we see the 1-hour moving averages, and then the daily moving averages are showing up as dots here as well. Now, one of the reasons why we want to have the daily moving averages in here is because, again, what I'm going to show you here is how I trade this by combining the daily moving average, the daily time frame, and the 4-hour time frame, with 4-hour being the main time frame. But we also want to make sure that we're trading with the primary trend. And then, of course, looking at the daily moving averages gives us a good idea of what the daily primary trend is. Now, one word of warning here. When you're trading based on the direction of the daily moving averages, you're going to have very few signals. So depending on your trading style and your availability, if you're a scalper, day trader, whatever, you might want to opt out with using the daily moving averages. And I'll explain later what the difference is between the primary confluence indicators and the secondary confluence indicators of this system. And the daily are secondary, so they're not as important as the 4-hour. But basically what you want to do is, when you're getting a short signal, a short entry trigger, now I will show you all the details of this, but when you're getting a short signal, you want to make sure that the daily 20 is below the daily 50 and trending to the downside. This obviously tells you that overall the average price on the daily is trending to the downside. Now again, the 20 EMA is the blue one, the 50 EMA is the gray one. When the blue dotted line is below the gray dotted line, that means that the overall daily primary trend should be bearish. That confirms that you're trading with the overall primary trend. We're trading the secondary moves within the primary trend. Okay, so that's the daily moving averages. What else do we want to add? We want to add the, so the stochastics RSI, we have that one. The stochastics RSI is only important on the entry trigger time frame. So if you're entering on the 4-hour, you only care about the stochastics RSI on the 4-hour. And that's all the indicators. We're also going to be adding the weekly and monthly open. And how do you add the weekly and the monthly open? Well, you can go to the monthly. You of course see that the monthly open is down here. That's the monthly open. There is a much better way to add all of this, and I'll show you later how to do that. That's the monthly open. Then of course we got the weekly open. WO. So those are all the things that we're gonna have on the chart, right? The weekly open, the monthly open, and then the daily EMAs, the 4-hour EMAs, and the stochastics RSI. Now, what I've done is I've developed an indicator where all of this is combined, where you have all of these indicators, including the stochastics RSI, built into the indicator called the RLZ slingshot. So if I remove all of this, and I add the slingshot indicator with all, and I'm going to be using this slingshot indicator for the examples in this webinar, but now you know what's included in the RLZ slingshot indicator, which indicators you can use. Like if you don't want to use the indicator, you can just add them directly to your chart. But just to make it simpler for me and to show you all the, and as you can see here, we have, it's a proprietary software, so it has momentum signals, ADX filter for strong signals. You got the stochastics RSI filter built into the indicator, and here's the high time frame EMAs that I want to be looking at, so the daily 20 and daily 50. Now, when I add this, you will see that we have the weekly open. You have the, so here you have the, you got the weekly open up here. You got the monthly open here. I'm going to go in, it actually has 3 EMAs, but I'm going to be adding that on to the 51, so it's basically the same. Now you're going to see that you're going to get the 20 EMA in the 4-hour, the 50 EMA in the 4-hour, the daily 20 EMA right here, and the 50 EMA right here. And you also have the monthly open and the weekly open right here. And of course you also get the signal. So if I add the second indicator here where you have the actual the signals on, you'll see that right now USD CHF is actually printing a long signal. And now I will explain what all of this is. So basically what I'm going to explain now is the RLZ method, and then the RLZ method is built into this indicator. So all the signals that I'm going to explain to you is built into this indicator. With some added proprietary software such as filters for the ADX, filters for a specific momentum trigger, and the stochastics filter and things like that, which is unique to the indicator. But let me walk you through the actual system here. So what we want is, we want to see that price is trading to the downside. And we want to see a break and retest of a horizontal level. Okay, that's very important. So we can see here, for example, on USD CHF, we can see if this is a valid signal or not. And I'll show you what happens when we come into the retest, what type of entry triggers we are looking at. So the system is based on 5 primary confluences and 3 secondary confluences. And I'm going to show you what those are. So first we have the 5 primary confluences, which is number 1 is the break and retest. Okay, number 2 is the EMAs. Now the primary confluences, they have to align. Without alignment between the primary confluences, there is no setup. 3 RLZ, the reload zone. 4 stochastics RSI location. And then 5 so number 5 would be engulfing pin bar rounded PA. And then we have the secondary confluences, which is number 1, stochastic RSI cross, weekly and monthly open, and number 3, trend lines. And I would say that it's going to be a break and retest of a horizontal level. And while going through the examples here, I will show you what this means. So what we want to do now is we see that we have a break to the downside. We have a horizontal level here around this area. Might not be perfect. The horizontal level might not be perfect. For this example, I'm going to include this low wick of the horizontal level. Okay. So we have a break and retest of a horizontal level. That's a check on number 1. And we also want to make sure that it's trading within the EMAs. It's retesting the EMAs and it's within the daily trend. So the 20 EMA on the daily is below the 50 EMA on the daily, and they're both trading to the downside. That is a check. And now we're also testing the EMAs on the 4-hour right here. Now we are testing the level above the 50 EMA in the 4 hours, so not the perfect example right here, but I'll show you why this doesn't really matter, because we're reclaiming the 20 EMA right here. So that's a check on break and retest of horizontal level. We got the EMAs, and then we have the reload zone. Okay, so we're going to be putting on the reload zone here from the high to the low. Now, the way you add fibs is, of course, you use the fib anchor high. Is going to be the high of the move that broke the level, or the swing high, and then you take it down to the swing low. Now, I did show you the settings of the RLZ, the reload zone and everything in yesterday's webinar, to make sure that I go through this and it's not going to take several hours. We are going to skip that, and you can go and check the replay on yesterday's live stream. So now what I'm going to do is I'm going to be adding the reload zone right here and extend it to the right, and we see that we do have a retest of the reload zone right here. So we have the retest of the horizontal level confluent with the reload zone, so that is a check on the number 3 confluence right here. And then we have the stochastic RSI location. What does that mean? Well, it means that on the retest of this level, the stochastic RSI needs to be above 70. And we can see right here, it retesting the level right here, and stochastic RSI is well above 70. So that's a check on that one. And then for confirmation, we're looking for a type of rounded price action, or an engulfing candle, or a pin bar, or a reversal pattern like I talked about yesterday. Now, what we have here is also something very interesting. This strong bearish candle right here is obviously an engulfing candle, and it reclaims the 20 EMA on the 4 hour. Okay, that's also something that we want to see. If the rejection happens around the 50 EMA, we want to see a reclaim of the 20 EMA. We do not want to see an entry trigger of a setup when it does not reclaim the 20 EMA. We never want to go short above the 20 EMA. We never want to go long below the 20 EMA. But that's the confluence right there, right? Let's see, where do we have, we're going to use the replay tool here, but see, we want to see where we have the weekly open and the monthly open and all of that. We're going to see if we have confluence with these secondary indicators as well. They're not necessarily, like, we don't necessarily need to have the confluence between the secondary indicator. They're more guiding, right? So we look at the stochastic RSI cross. Do we have a bear cross? Yes, we do have a bear cross on the stochastic RSI. And then we look for the weekly and monthly open levels. Now, they are guiding indicators. And what I mean by that is, if the weekly open, now you see the weekly open is that blue line right there. If this weekly open would be down here, that would be a perfect take profit target. If the weekly open is up here, that would be a good level to put your stop loss above. Now the weekly open is right here. And the weekly open is a lot of times been used as a very good horizontal support and resistance. And what we see right here is, in this case, the weekly open has not been tested yet, and it's right below price where we want to enter. Okay, which means that this might not be a great place to enter, because you see that the weekly open might be used as support here. But this is actually adding a confidence to not take the trade. So if you're taking only the perfect trades, then this might not be that perfect trade. And then finally, we have trend lines. Well, what if we add a trend line area like this to encapsulate the highs and the lows of this move? This, of course, adds confidence to the setup, because we have a break and retest of horizontal level, we have a break and retest of a trend line, we got the break and retest of the reload zone, and everything kind of aligns here. Now, if we ignore the weekly open, everything else aligns. The only fact that does not align with this setup is the weekly open. So you have to make a decision. Am I going to be taking this trade without that confidence? Remember, the weekly open is just a secondary confidence. It's not super important. But if you want to take only the perfect trades, this is not the trade that you're going to be taking. You want to enter here. So there's two ways to enter this setup. Either you market enter on the confirmation of the setup with the bearish engulfing candle, or you put your limit orders on the 20 EMA. And another very successful way you can get good entries is by adding the 50% fib as well. So if we add the 50% fib here, you see that you want to get the hit of the reload zone, and then you want the entry confirmation candle to close, in this case for a short below the 50, and then for a long above the 50. Now you see that the bearish engulfing candle closes below the 50, and in this case right here, you have perfect confluence between the 20 EMA on the 4 hour and the 50% fib. So in this case, what I would do, and I also have a low time frame level right here, that it was support, that it got lost, so now on the retest you can expect that to act as resistance. So in this case, what I would do is I would put my short orders on the retest of the 50% fib, and then stops depending on the risk to reward, depending on the overall market structure and the confluences. You want to put the stop loss either above the high that created the setup, or all the way above the reload zone. Now in this case here, I would probably opt in to put it somewhere around here, above the high of the above the high that created the setup. When it comes to stop loss placement, you want to make sure that you have a wide stop loss. Okay, a wide stop loss, because you never know what's going to happen. You might have a wick coming up here back into the reload zone, because as you see here, these levels above are not perfectly retested. So you might have a wick coming up testing that level and then moving lower. You also have the daily 20 EMA right here. So it's important to have a wide stop loss. So if you're worried about things like that, put your stop loss above the reload zone. Now you're absolutely safe. And now looking at the FTA. Now, where is the FTA? Now, I usually view the FTA as the last local low when shorting. Now, we can, of course, go out to the daily and really look for where do we have the FTA. Well, I do think, of course, that if we add a level here, we'll see that this is probably where we should take profit, because this is a high time frame support, high time frame low. And you know, the high time frames, we might see that this is what's stopping price, and we might start ranging in this area. So we want to take profit down there. Going back to the 4 hour, we put our limit orders on the retest of the 50, and we're going to put our TP right here. Now, this is above 1 hour, and by testing, I've seen that when you're trading this correctly, you should have a 60% win rate or higher, which means that you can definitely take trades that have 1 hour or higher. Now, of course, as you can see, if you're opting for a tighter stop loss above this, now this becomes a 2 hour trade. But of course, having a tighter stop loss would also mean a lot of times you have a lower win rate. But it's going to even itself out. So you can ask yourself, high win rate, lower risk reward, lower win rate, or high risk reward. Depends on your preferences and what you can stomach when it comes to losses and things like that. So that's going to be your FTA. Now, obviously, like I said, I haven't prepared any examples of this. We're going to look at the live market. So I don't know if this is going to work or how it's going to work, but let's see how it might work. Well, okay. It went straight down to that TP without without us getting filled. So without us having a fill on that trade. But you can see that it did act as resistance here. I mean, it did come down to that support. So now let's look at a couple of other markets right here. And I will explain how we can apply things like a top formations and bottom formations with this. So let's take this example. It's actually pretty cool. I don't know if you know, but you can remove price and just have the indicators on. So let's assume that prices now, we have the daily EMA above the 50 EMA. The daily trend is bullish, and you get price trading like this. Actually, that's a little bit too steep, so we're gonna do this. Okay, so you get price. So Michael, we can take a look at ADA and XRP later. Imagine that price breaks out here and it kind of starts trading like this, perhaps. And you add the fib from that low to this high, and you see that price is coming down into the reload zone here. And now obviously what I like to see is some type of a double bottom formation like this. If we get this, where we have, let me add the 50 here. We have the first bounce here, moves out of the reload zone, and then you get another retest right here. We have a double bottom formation. Double bottom formation, and this is the neckline of that one. You might have a bullish engulfing candle right here. Okay, so price is coming down. All the primary indicators align, and you have a double bottom within the reload zone on the 20 EMA, and you have a bullish engulfing candle on the right leg of the W. This is a highly effective setup. When you get that breakout, that's when you put limit orders on the retest below the low that created setup, and then you TP at the last local high as your FTA. But of course, this is a trend following system. So if you're entering early in a trend and you're looking to ride this trend higher, I would suggest putting and exiting like 50% or 25% of the position at the last local high, move stops to entry, and then you let the trade run. And the way I move my stops up is basically every time you have a new retest of the 20 EMA, like here, you move your stops up with every new swing high. And this way you make sure that you ride the trend. Because remember, this is at its very core a trend following system. I'm going to be adding back the price here, and we're going to be looking at possible trades. We can look at this one. So for these examples, I'm actually going to go in and I'm going to remove the high time frame EMAs. Make sure that we're getting a little bit more signals. So here we have, we can look at Euro NCD here, and we can see that we're obviously in a downtrend here. Some type of sideways trading market here. And then what happens here is we start to potentially trend. And this is just such a beautiful example, right? Where you look at that retest of the 20 EMA right here. What we're going to do is we're going to add the fib from this low, this high. And what do we see? This is on the 4 hour. We see a retest of the reload zone right here. And it's, I guess you could call this an indecisive candle with a body, and then the wicks on both sides is equal in length, almost equal in length. The wick to the downside is a little bit bigger on this one, which add confidence to the buyers. And then the next candle is a pin bar candle. So the next candle is a pin bar candle, and stochastics are sized somewhat in a good area right here. And you might also add a trend line here. You see that you have a trend line going here. This was the low, hit that trend line. You get a bullish pin bar right here. I'm gonna put your stops in this case even below this wick and below the reload zone, and then put your TP maybe on the last local high right here. Now this is the simplest way of trading this system and the simplest way of taking profits with this system. But I also talked about the template with the fib template that I showed you yesterday had more fibs. It had extension fibs, right? So if you go to that template here, you'll see that we have many more fibs being added. And these are the extension fibs for taking profits with this system. So if you look at these extension fibs, we want to potentially take some profits at the 0% fib. We want to take some profits at the minus 0.236, minus 0.382, and finally, last TP would be the minus 0.618. Now, if you just want to ride this trend with a trading stop loss without taking profits on the way, I would recommend having your final TP as the minus 0.618. Let's try this out and see how it works. Now, imagine that we do enter on the close of this bullish pin bar candle. Everything aligns. Now, let's see how we would move our stops up. So what we want to see now is we want to see a break above the last local highs. This is where you would have your first TP as well. So we break out. We're not even getting a bearish candle here, so there's no swing point where we can manage our risk. Okay, so it's literally just goes from entry to TP in basically one move without showing us any bearish candle. So can't really give you any you know, how to move your stop loss. But let's assume that you're still in this trade, right? Let's just assume that you're not looking at the extension fibs, right? Let's just say you're looking at this entry, and then you're just gonna exit whenever the trend is broken. And you can use different methods. I would just move my stop loss up with every new swing low. You can also apply a method where you're trailing your stop with the 50 EMA, because remember, price usually goes below the 20 EMA, but when it goes below the 50 EMA, you're definitely out of the trade. Now, the thing with this one is you're gonna have a lot of very small winners by trading a stop like this, but eventually, like a couple of times a year, you will have insane winners, like insane winners. Okay, let's try this out. Now, I don't trade this way because it's very difficult to hold positions this long and wait for this. Well, let's see. We want to wait for a 4-hour candle opening and closing below the 50 EMA on the 4-hour. Now we see that we're forming a range up here. Okay, we got the first candle testing the 50 EMA. Ooh, that's a tough one. It actually reclaimed it. Still, and now, okay, we do not have an open and close below the 50 EMA. And now we see we have like a range here. We can add a trend line here. And we can use that trend line as a way to manage our risk. There you go, it's breaking above that one. See, okay, now we'll probably want to move our stops here, right? Price continues. think if we break up higher, we want to move our stops up like that. So now we move our stops up here. And that's a good swing. I mean, at this point, we're up, 10 R's. So we might as well just secure this trade because it's already a massive winner. So moving our stops up here means we're securing an 8R trade. And if you look at this is, we did get in, and this is why I say all the time, like, you apply the fundamentals of technical analysis and you trade with the trend. And the best way to make money using technical analysis is identifying the start of a trend. And that's very easily done by looking at, a downtrend goes into accumulation, and then you break the highs of that accumulation range right here, and you form higher highs and higher lows. You get in on the retest, and then you move that stop loss up, you trail that stop loss up, and you ride that trend. Now, you know what? Let's not secure this trade here. Let's actually wait for the breakout. Let's actually wait for the breakout here. And we're gonna keep our stops down here. Now, of course, you want to go out to the daily as well. You want to apply your high time frame analysis here. And we look at this, and doesn't this look like a good take profit area? I mean, seriously, you look at this and you say, I mean, we basically went from the lows to the high. If I were in this position, I would personally exit here for a 10R trade. That's what I would do. Now you see that we stayed in this example for 18 days. So this is a true swing trade where you catch the move, These trades, I gotta be clear with you guys, did not come along very often. If you look at a chart like Euro NCD, the only times where you're able to get in on a move like this is, maybe in October 2023, December, January 2023, February 2024, and now June 2024. So on most of the forex pairs out there, a trade setup like this one is only going to come along maybe, a couple of times a year, because you'll miss out on most of them. So maybe only a couple of times a year. But then again, you make a 10-hour trade on, you scan 40 different pairs, 40 forex pairs, you find a couple of trades like this every year, then that's all you need. Like, if you look at professional traders like myself, we usually make about 80% of our profits in 20% of the year. And look at my personal trading right now. On the S&P 500. On the S&P 500, I'm up currently like 15% of my whole account on one trade. One trade, the biggest trade of the year. It's a trend following system, trend following trade. And what do you think that trend following trade is based on? Well, let me show you. Go to the S&P 500 right here on the daily. Add the RLZ slingshot indicator. This is a strong long on the RLZ slingshot indicator. This is the exact setup that I've showed you on Euro NCD, but on the daily. We have a retest of the 20 EMA. We have a bullish pin bar right here and a strong long signal. Enter on that candle. Stops below the reload zone. TP at the minus 0.618 extension. I'm up 15% on this trade. If it hits TP, I'll be making about somewhere between 30 and 40% on my whole account in this trade. This is the trade, one trade that will make my whole year. Okay? Just something to think about. But going back to this trade right here, when you're trading a stop loss with the trend, you want to make sure that you're not always just following the trend forever. You want to make sure that you're following the trend. Remember, we're trading the secondary trend within the primary trend. You want to make sure that you follow that trend till the level on the higher time frames where you think it's most likely to get to see a rejection, which is obviously going to be up here. But just for the sake of this example, let's continue to trail our stop up with the 4-hour 50 EMA. Yeah, you see, it's just rather insane how what type of trades you can get with this. It's absolutely insane. Absolutely insane. You catch some of these and you don't have to be trading a lot. Up 17R. Up 20R. Would you hold this? I know I wouldn't, but if you can, you're going to be making shit ton of money trading if you can hold this. Waiting for a 4-hour candle to open and close below the 50 EMA, and that's going to be your exit signal. Probably going to happen any minute. That's it. That's our exit signal. Now, of course, you see that we go from 20.7R all the way down to 15R. I mean, I'll take 15R any day, but that's the way we do it. You know, we look for candles opening and closing below the 50 EMA. That's going to be your exit. And that's also when I'm in long-term signals on things like Bitcoin. That's actually one of the main signals for an exit. If you look at Bitcoin here, for example, we add the reload zone. If you go to the daily here on the Bitcoin, looking at adding the 20 and the 50. Now, one way for me to the way I timed the top in 2021 was to actually exit my Bitcoin position when the daily had an open and close below the 50 EMA. So which means right here, I did exit the market on Bitcoin right here at around 50, I think it was 52, 53,000, something like that. Now, of course, we did rally after that up here, but that was the actual top, right? But I exited here. I remember getting a lot of ridicule and hate for exiting Bitcoin too early, but I exited 53, 52, and the actual high of that move was, you know, up here. But I managed to, I mean, the actual high was 69,000. I got out around 53, while a lot of people thought that, you know, we got a rejection here and now we're just going to smash this high and continue higher, which of course never happened. And then, you know, we re-entered Bitcoin down here again, and now we're looking for the same idea. We're looking for Bitcoin to get in on, like, reach a major top, which I believe is going to be, you know, when we really break out here. And then what we're going to be looking at is a close below the daily 50 EMA, an open and close below the daily 50 EMA, just like we do with the RLZ slingshot indicator when trailing our stop losses. All right, any questions? Let me know if you do have any questions. Now, this is a very simple way of trading, and you don't really, now what I want to tell you as well is everything that I've showed you, all the indicators and everything is available within the RLZ slingshot indicator. And I'm going to be setting up a giveaway link using Gleam, where I will be giving away 1 lifetime access to the RLZ slingshot indicator. And also want to make sure that you guys are aware of the current Black Week deals that we're running within RLZ trading right now. Next week, we will increase prices. So if you want to lock in on the current deal, which you can also use the code BF to get a 50% discount on all the products right now, to lock in your price for any to be shielded from any future price increases. And next week we're also launching the private mentoring part of the RLZ exclusive, which means that we're doing a 1 hour Zoom call every week, where we go through different concepts based on what you need help with, what you are struggling with in your trading. And also I'll break down, you know, the setups of the week. You know that in the free community within Discord, I do have that market analysis channel where I share all my analysis, all my trades, everything that I'm doing in the markets completely free. But then in the RLZ exclusive private mentoring group, we are going to break that down. Like, so any setups that I take, I'll break it down, why I took that trade, what fundamental biases I had for that trade, and technicals and all of that. This is a good question right here. Can we rely on the RLZ RLZ slingshot indicator, or we should check by ourselves all the 5 points that you showed. So the thing is, if you do not use the RLZ slingshot indicator, you have to go through all of those 5 points and you have to check all the confluences by yourself. It's already included within the RLZ slingshot indicator. Now, what I do recommend is, and of course there's a course that goes with this RLZ slingshot indicator, so you'll be enrolled into a course as well with the indicator to show you exactly how to use it. Now, what you need to understand is the RLZ slingshot indicator is a trend following indicator based on moving averages. Moving averages does not work in a sideways trending market. In a range, moving averages simply do not work. With the RLZ slingshot indicator, there's going to be a lot of false signals. And for example, this one, I believe the one that I've showed you now might not even have been a signal on the indicator for, not sure why. Let's take a look at it. Let's see if it's actually a signal. But you can see here that we have a couple of short signals within a range, and obviously all of these are not very good signals. I mean, here we were still trending, so that was a good short, but then you see that the moving averages are starting to converge and they start crossing each other, and it's not really a good you simply cannot trade with moving averages when it's ranging. So applying the market structure analysis that I showed you in yesterday's webinar is what you need to do. But let's look at the settings here and see if we can force a setup on this one. And the way that we do that is we try to remove the stochastic RSI filter, and then we see if that makes a difference, because of course you can play around with the settings of the indicator to give you more signals or less signals. Obviously less signals based on more strict requirements will give you less signals, but most likely more, removing restrictions will give you more signals but less profitable signals most likely. You can see here if we do have, how would we have create that as a signal? So that for some reason is not a signal. It's probably, I think this might not be a signal because this candle is not being categorized as a pin bar candle. I don't think that that candle is not showing us the right characteristics of a pin bar candle. I believe that the body in this case should be smaller. We can go to the S&P 500 long setup and we see that this, now I don't want to give away too much of what's going on in the background with this indicator because there's many more signals. I can't share with you everything, obviously, because there are some proprietary ingredients, if you will, within this, and one of the most important one is the momentum signal, which is built into the code of this one. But you can see that on this signal you have an outside bar engulfing the whole range of the previous candle. An outside bar with a big wick, so you could say that this is an outside bar and perhaps even also a pin bar candle within an outside bar. And then if you look at the stochastic RSI, you see the stochastic RSI is actually not in the right location. So if we go into settings here, you see that I believe that so what I have for the stochastic RSI filter here is I've flipped it around. So the lower stochastic RSI is 70 and the higher is 30. And this is to make sure that I'm getting more signals. And I only want to make sure that I'm not getting a long signal when the stochastic RSI is above 70. So anything below 70 might give me a long signal. And that I've seen, and I also talk about this in the course, but I've seen that that is giving me quite good good signals. But if I remove the stochastic RSI filter and I remove the momentum signals, I'm most likely going to get more. Remove the trend-based signals as well. Could you make at the end some observation on Forex market? Yes, I can do that. I'll do that right away, because I think an hour with the RLZ method, I think that's, we don't need really more than that. So again, the importance of identifying market structure here is obviously very important, because you see right here that this is the trend, and the trend ends here. You're getting a long signal here, but that's like you're getting a long signal when you already broke a level. So it's very important that when you get a long signal, you make sure that it's a good signal. And everyone in the everyone within RLZ exclusive gets all the signals forwarded to the Discord, and they look something like this. So here you can, for example, see a short setup being printed on Euro NCD on the 4-hour. So you don't even have to set up the alerts on your own. You don't have to everything is within the Discord community. Okay, let's talk a little bit about the overall Forex market and what I'm expecting going forward. It's gonna be a short one, because I do have another meeting coming up. Let me know if you do have any questions on anything that I've covered here today as well. Okay, so let's start with my overall idea. I do recommend that you check out the market analysis channel within the Discord. You can join for free. You can use the link in the description below and join for free, where I did an extensive cover of my macro outlook. But I want to talk about some specific ideas that I'm watching. So first, what we have is, well, of course, I'm long on the S&P 400. I think we're going to break into new all-time highs. Obviously, I think this move is going to continue to the upside. One of the ideas that I'm watching throughout this week or throughout the whole month is there's a couple of conflicting ideas here. And first, so the RLZ slingshot indicator is actually not free. They're not supposed to be free. Maybe they are. Maybe I have them. Maybe they're free. Okay, I could look that up. They're not supposed to be free, but maybe they are. If they are free, let's keep it that way. Yeah, let's have them for free. Okay, so there's a couple of conflicting ideas here. Now, the first idea is obviously the fact that So the Eurozone is very weak. It seems that the central bank in Europe is more hawkish. You know, they're looking more dovish. I mean, the markets in Europe is weak, which means that the European Central Bank and central banks of other countries in the euro area that is not using the euro as a currency are looking to keep rates low to help stabilize the economy. While in the US, with the tariffs coming in and everything like that, when Trump's and the tariffs, people are expecting Trump to perhaps be inflationary to the US dollar, which of course creates a scenario where the US dollar is outperforming the euro. But I'm thinking that we might already have seen this move. And I've closed my short here, and we're now seeing that we're potentially starting to reclaim. I mean, if you look at the daily, let's go to the weekly. we had a break to the downside. We did test the 50% fib right here. So this might have been the move. And of course, if we look at the dollar currency index, we did see that the dollar currency index did break out. We did get a bounce here. It's holding support, but it seems like it potentially wants to move lower, but we are trading. So we have a breakout on the dollar currency index. If the dollar currency index continues to the upside and we do see increased weakness in the euro, I will be shorting euro. I will also be going long USD CHF. Now this is the idea that we had on USD CHF. Now I closed this in a profit, but we're still looking for potentially entering this trade again. That might look like something like this, right? That would also mean renewed USD strength. And I mean that's basically my outlook right now. I'm looking at, you know, possible USD CHF long, possible Euro USD short, looking at potentially shorting GBP CAD again while we're now up inside this level. I've closed the GBP CAD trade. Like, you know, I'm only in the S&P 500 long, but if you look at GBP CAD here, and of course we can perhaps apply the RLZ method to this one as well. Now this is on the daily, right? And if we add the reload zone here, it's a perfect test of the reload zone here on the daily. And if we trade up around this area in, you know, maybe 2 or 3 days, the 20 EMA will be change this. You know, the 20 EMA has now crossed below the 50. If we trade here for a couple of days again, you'll see the 20 EMA come lower, and perhaps price can retest the 20 EMA, and then you have the weekly open down here. So if we form maybe a daily bearish engulfing candle like this, we might have a daily signal on the slingshot indicator as well, with the weekly open being our profit taking for this one. You just need some, exactly like Henry is saying, you just need some confirmation here. Now looking at the 4 hour, that might be, you know, again, that might be something like this or whatever. But guys, I really have to go. I have a meeting coming up. If you want, I'm going live with, on the Fiverr's YouTube channel later today as well. We're going to talk about you know, technical analysis. Does technical analysis really work without being influenced by fundamental analysis? Can you really be a profitable trader just using technical analysis? And of course, I'm going to be doing a general market overview with Victor in that live stream as well. So if you want more, if you want a deeper look at the Forex market and my predictions going forward, make sure you join that live stream. All right, guys, thanks for joining today, and I hope to see you all in the community. We got some really exciting stuff going on, and we're really building something huge in there, so I hope to see you all in there. Thank you for joining today, and see you all in the next one tomorrow, same time. Take care.